Hi and welcome to Axis Direct Opening Bell, your essential pre-market podcast. In just minutes, get key global updates, overnight trends and market-moving factors that set the tone for the day. Whether you are a seasoned trader or just someone tracking the markets, this is your go-to briefing to stay ahead at all times. So let's dive straight in. Good morning on Wednesday, and we'll start with the global markets. US markets were mixed on Tuesday after the latest jobs data. The S&P 500 slipped 0.2%, the Dow fell 0.6%, while the Nasdaq rose by 0.23%. Delayed labor data showed the US economy lost 105,000 jobs in October, pushing the unemployment to 4.6, which is the highest since September 2021. However, November brought some relief with 64,000 jobs added, which surpassed expectations of 45,000. Asia-Pacific markets mostly fell in the early hours today as investors passed trade data from Japan. Nikkei fell 0.14%, while the Topix declined 0.37%. Moving on to the Indian markets, Nifty closed at 25,860, down 167 points, while Bank Nifty ended at 59,035, falling 427 points. The index slipped below Monday's low of 25,922 as the rupee weakened to 91 against the dollar, which dented market sentiment. Despite the decline, Nifty is still holding near the 40-day EMA around 25,834, which is providing immediate support. The setup remains cautious. Nifty formed a bearish candle with a lower high-lower low pattern and continues to struggle above the 20-day SMA and the falling channel resistance. For bulls to regain control, the index needs a sustained move above the 25,980 to 26,050 zone. This could open the upside towards 26,200. On the downside, a decisive break below 25,834 could drag the index down towards 25,700. At the sector level, the top gaining sector was Nifty Consumer Durables, which rose by 0.6%, while the top losing sector was Nifty Realty, down 1.3%. Out of the 12 sectoral indices, 2 closed in green, 1 was flat, and 9 ended in the red, indicating a broadly negative market breadth across sectors. Amongst the F&O stocks, Vedanta Limited was the best performer with a gain of 4.2% as NCLT Mumbai approved its demerger plan. At the other end, Policybazaar was the worst performer, declining 5.3% as the new insurance amendment bill proposes to cap agent commissions. On derivatives, FIIs stepped up selling sharply, dumping 2,382 crore in the cash market and pushing the monthly outflow to a steep 16,134 crores. This selling pressure quickly showed up in derivatives. Nifty futures fell alongside 2.2% rise in open interest, clearly confirming a bearish short buildup. Bank Nifty was even weaker with a sharper price decline and a steep 8.6% jump in open interest, pointing to strong institutional conviction on the downside. The overall market structure worsened further. The Nifty put-call ratio dropped sharply from 1.11 to 0.90, while the Bank Nifty PCR slid to 0.77. Options data added more clarity. Call option interest additions were roughly twice that of puts, reinforcing resistance around 26,100, even as put writers offered some support near 25,600. FII positioning remains extremely defensive, with the index futures long-short ratio collapsing to 0.10, highlighting a heavy net short stance against a large retail bullish long position. Adding to the pressure, the rupee hit fresh record lows, closing near 90.96 per dollar. Despite all this, India VIX eased 1.8% to 10.06, suggesting calm in volatility readings even as underlying stress in the system continues. On commodities, spot gold traded volatile and ended flat at $4,304 after the US job report signaled a cooling labor market. It showed higher unemployment and slower wage growth, supporting dovish Fed expectations. Technically, gold remains in positive territory. Meanwhile, WTI crude oil prices fell over 2% to $53.3 per barrel as hopes of easing Russia-Ukraine tensions raised prospects of increased Russian oil supply amid ample global supplies. At the India macro level, India's manufacturing growth slowed in December, with the PMI slipping to a one-year low as new orders and output moderated. At the same time, exports showed strong resilience and rebounded sharply in November despite steep US tariffs. That's it for today. Please note that this podcast serves solely for informational purposes and should not be considered as financial advice of any kind. For a comprehensive disclaimer, please visit our website. Thank you and see you tomorrow at the same time.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.